Would you ever recommend that somebody consider an investment in Bitcoin or Ethereum or something like that?
Yes, it depends what age it is and what you're trying to achieve. And right now it's difficult to put in a 401k because there's no ETF or simple vehicle. You can buy that, the Grayscale Trust, it trades at a big premium. But let's say you can find 20 grand yourself or 25 grand yourself. And think of it in these terms. If you lose half of your money, if that's too painful, don't do it. If you think I can lose 12,500, but I can make 200,000 or 500,000 over the next 5 years, that's the kind of bet that you have. So it's really going to enhance your portfolio. The younger that you are, the more you should put in it because the more risk you can take. The older you are, the less you'd put in it, but you might have some in because it's going to help offset other issues you might have. Look, there is a secular shift going on. I grew up in the UK and there was a massive societal shift, much like we're seeing in the US now, back in about 79, 80, 81. And what happened was we lost the steel industry, the shipbuilding industry, the coal mining industry, and the tin mining industry all in one go. And that never came back. And guess what? It's pretty difficult to retrain a 55-year-old steel worker into the services economy, for example. So it creates structural, rigid unemployment for extended periods of time. And those cities took a long time to come back. Many of them never came back. So I think the same is true. I mean, realistically, shopping malls, that game's finished. There'll be some in certain routes, but it's not really going to be there. So I think there's a structural shift coming. And my guess is you'll end up buying shopping mall, knocking them down and building apartments because need apartments because this massive millennial population can't afford, there's not enough supply. They need to get into stuff. We need cheaper, high quality apartments for that huge population because they're still having to live with their parents. They're still in the renter economy. There's a bunch of things that can be done. So my guess is we'll be ripping up shopping malls and changing them to other things. Now, in terms of office space, who knows? The jury's out. And in stores in, let's say, New York City, I think the jury's out. I think young people will find that there's lower rents and they can create their own businesses and they can start the entrepreneurial cycle again. You know, changing some awful chain store like Staples and turning it into an artisan bakers and somebody's in control of their own income. Great. I think that's coming because rents will come down because the chain stores won't be there any longer. There is no point. But artisan stuff, yes. Shopping malls, no. And apartments, of course.
If you are looking into what to invest in the future, what trends do you see that people may not see yet? What do you see coming?
Look, I think this cryptocurrency trend overall is bigger than people can yet get their heads around. It's currently, the whole space is about a $1 trillion asset. My guess is we'll be talking about a $20 trillion asset plus in the next 10 years. So, okay, we don't get many of those opportunities. The other long forgotten one is emerging markets, because the US has dominated so much this last cycle that nobody invests in emerging markets anymore.
Can you name an emerging market so people know which one?
India, right? There's ETFs trade on India. India has a phenomenal demographic, high savings rate, low debts. It's completely the opposite of the US or Europe in terms of how it looks structurally. Probability of making money in India over the next 10 years, extremely high. And you know, if you look at the relative valuation of emerging markets, they're very cheap. So people have forgotten about these things, but my guess, if we come back in 5 years' time and have this conversation, everyone's going to be talking about the bets that they've got in India and some of these other big emerging market countries.
And then what about China? What's happening there with the...
China's more complicated. So A, it's got an aging population. B, it's got massive debt. But it kind of does know that it's got its structural problems with its banking system and the excess leverage, and they're trying to clear it out. So I don't know. It's not the one that I have a clear vision on. India, I've got clear opportunity. China, I don't know. It's a mix and match here. Maybe it's just Japan. We've had the peak, and it goes up and down with the business cycle for the next 30 years, which is what Japan did. It took a long time for Japan to change any of that excess debt dynamics.
So this is my big question.
Go
If
for it.
they, you know, what Japan did was they started buying equities. Is the U.S. heading there? They're going to...
Right now, they don't need to because equities are all-time high. Could Europeans do it? They don't need to because most of the pension system is in bonds. So the European society is bondholders. The US are equity holders. Equities are at all-time highs. The real reason to buy equities is you don't want to default on the pension obligations of the baby boomer generation, which is 76 million people. So if equities fall, let's say there's another catastrophe and equities fall 50% here and stay down, yes, I think they will, because you're going to rob all of the baby boomers of their retirement. That's already a problem.
Yeah, and then I've heard the other programs, you've talked about this pension crisis.
Yeah.
What final word on that? What do you see in the pension area for boomers? Because I'm the old guy here.
It's really serious because the pensions never made enough returns because of zero interest rates to pay what people think they're going to get to retire. And there's a big shock coming. So whether it's the state pension plans that are bankrupt or people's 401ks that just won't have enough money for them to retire. So they either stop spending, which is what I think is going to happen. So the whole US economy lowers like Japan did and Europe did, or we end up with a pension crisis as everybody has to sell out of their equities at the same time. So they've got money to spend on their bills as they retire. I worry about, and many people talk about this, the expected future returns from the stock market is negative. The expected future returns from the bond market is negative, and the credit market is negative. So that leaves you with potentially real estate if you find the right bets. And it probably leaves you with emerging markets, which are positive, and cryptocurrency. So people are going to have to navigate, and this is again why we started Real Vision, is people have to understand this. We have to take control of our own finances now. We can't leave it to some other guy because they don't actually care if we don't have the money to retire.
So, there's 21 million Bitcoin. Is it theoretically possible that could be the money for the rest of the world? Can it keep expanding out? I mean, I know that thing called SATOSHIs, but I don't know what they are. But can they keep dividing?
Yes, well, it divides down to 8 decimal places. And which means that it's expandable. So, you could theoretically get to 1 Satoshi equaling $1. I mean, that's a huge number. The reality is we talked about before about this network effects with this, but it also applies for institutional money managers and corporate treasurers, because if they have it on their balance sheet, they're outperforming everybody else. So it encourages other people to get involved because they need to catch up. Then the market cap goes up. So it goes from 350 billion to $1 trillion. Now at $1 trillion, it means BlackRock can get involved. So they get involved and the market cap goes up to $2 trillion. And that brings in the sovereign wealth funds and it goes up to $5 trillion. And as it broadens out in its number of users, the volatility comes down and it becomes a more usable form of money. Right now, it's basically a store of value plus a call option on the future of financial technology, which is why we've got such this racy trajectory that it has. Eventually that trajectory will flatten out and will look much more like gold, which is a stable store of value. But right now we're at the exciting part where we get 2 parts of this, the store of value and the future of technology.